Crude inventory shows another build. Refined products are not getting the drawdown in the summer season, and more supply is coming onto the system. Dan, you think we could be looking at an oil recovery longer term? That's a much different posture than we've spoken about before.
Yeah, I mean, look, this has been about a W recovery. This has been about a price that we didn't believe at $60. We thought there was going to be another leg down. Oil is today broken $50 again. I do not think it's going to make a secondary low. I don't think it's going to break the lows that we set in early March. I think we're going to see something again in the low 40s, $43, $44. But I think that's going to be the limit on how low this stuff goes. There's a limit to how low this goes. And but for now, supply is really the key word. It's the watchword. You talked about the EIA numbers. Right. Stockpile numbers went up again. In this case, you know, the EIA, which has a history of being spectacularly wrong most of the time, has been spectacularly right. They saw that numbers were going to drop for a few quarters, which kind of lifted oil into the 60s, but they did predict that after the second quarter was finished, you'd start to see again these buildups in production numbers, and they're coming. We've seen it in the Bakken. They've increased production, surprising everybody. Rail cargoes are increasing again. Barge cargoes are increasing again. There's just this huge glut of oil domestically, as well as what we're seeing internationally with the Iran deal. We're talking about another million two barrels of exports that'll come online as this deal is approved, if this deal is approved. All of this leads one to believe that we're headed back down very close to the lows we set in the spring. So
if we test those March lows, where do we go from here? I mean, do you think this is the appropriate range we should be in, the $50 to $60 range? I don't see why it should go any higher.
Well, the point is, for right now, it doesn't go any higher. But again, we talk about this all the time. We got to remember, long term, these are unsustainable prices. 30% of the oil that's being produced right now does not have a break-even price of $59. It's got a much higher break-even price. And so, economically speaking, it cannot last forever. Right. The question is how long it lasts. When does the oil sector become investable based upon oil prices?
Because something has to give somewhere. So a producer is going to have to go.
Exactly. And in fact, this is the first leg, this is the next leg down that finally breaks the back of the bond buyers who have been throwing money at oil companies, at the equity buyers who have been throwing money at oil companies. This is why oil companies have been sinking away to new lows. I talked to Jim, Chesapeake at $9, you know, mid-30s for Continental.
EOG getting close to that 75, which has to be so attractive.
Exactly. Very, very cheap and probably really attractive to someone like an Exxon. So those are the numbers we're looking at right now. Clearly, they're breaking the camel's back finally. This shale bust that I talk about in my book is finally going to play itself out in the correct way, where there's going to be wholesale consolidation and wholesale bankruptcies, clearing the market finally and getting to that place where we're going to see.
So outside of the commodity recovering, the consolidation is going to be where the bid in the sector is. You have to wait for that to happen.
Absolutely. And I said this to Jim, and it bears repeating. You have to wait for some of that money to start to come in from a secondary source. No longer from the bond buyers, no longer from the secondaries of stocks that have been given out. You're going to have to see real bankruptcies and real major buyouts going on. I'm talking about majors coming in, Exxon, Chevron, Conoco, Statoil, coming in, buying the big players or the large caps here in the United States, making bids for Hess, Continental, EOG, Anadarko, anything like that. Once you see signs that that's happening, we're reaching the bottom.
All right. As always, thank you very much, Dan. For TheStreet in New York, I'm Jill Malandrino.